Hello and welcome everyone to this month's monthly market update for December 2023. My name is Stephen Latham and I am the Chief Investment Officer for Bernanke Wealth Management. And this month I'd like to go over just a couple highlights that we feel as though really show what we've gone through in 2023 and set the stage a little bit for 2024. So let's start with the stock market. This year, we've really seen a small group of individual stocks drive the primary performance of the S&P 500, the largest 500 stocks in the United States stock market. Called the Magnificent Seven, these stocks, as you can see on the slide here in front of you, have appreciated on average over 70% throughout 2023 thus far. Now, if you look at the S&P 500, which is the orange line here, the S&P is only up just shy of 19% so far. The other 493 stocks in the S&P 500 are up just barely 5%. And so you can see how this lack of breadth across the market has really hampered any individual who hasn't owned a large portion of those 7 stocks in their portfolio. And it's not uncommon to see that. We typically don't see a handful of individual stocks drive the performance for so long at such an aggressive pace. So going into 2024, we do believe that some of this difference in performance between these large 7 stocks and the remainder of the market is bound to come together. To put a timeline on it would be a fool's errand, but we do believe that history would suggest if you're going to have a healthy stock market continue to appreciate, you need participation from the other 493 stocks in that market. Now, moving on to inflation. In 2023, it was really the core piece of data that just about everyone was keeping an eye on to see where the economy was going to go. Absent the consumer, inflation was really the biggest piece of what the Federal Reserve was looking at in order to adjust their interest rate policy campaign. And so far, as you can see on this chart, going back over 20 years, we've obviously had that COVID-related spike to inflation, and we've come down materially from those spikes just a year or two ago. Currently, the core inflation, the orange line, which is what the Federal Reserve likes to look at because it excludes more volatile components like energy and food items, is back down near 4% as of last month's reading. The Federal Reserve would like to see that closer to 2%, so there is quite a bit of room to go before they achieve that mandate. But if you look at some of the other items like food and services, or specifically food, I should say, for the blue line, that's one that really impacts the consumer. And if we're seeing that come down, now close to 3.3%, that means that there's a little bit of that inflation-related weight coming off of the consumer's shoulders at a point where their spending is already starting to get marginalized because of how aggressive inflation has been over the last couple of years. So going into 2024, we'd like to see these trends continue. We don't believe it's going to be a straight line down to that 2% target, but we do believe a lot of the pieces of the puzzle are in place for inflation to continue moving towards that 2% target throughout 2024. And then finally, employment. What are we seeing with employment? What are companies doing these days in order to maintain their growth prospects? Well, over here on the left-hand side of this slide, we see what's called continuing claims for unemployment. And what that means is after you've filed for unemployment the first time, which would be your initial claim, and you've continued to claim unemployment because you're seeking jobs and you haven't gotten a job yet, that would turn you into continuing claims, basically meaning that you are still looking for a job. And a spike in continuing claims, like we've seen here just over the last couple months, suggests that employers are pulling back on their hiring needs. Recall last year, in 2022, it was virtually impossible for employers to fill the vacancies that they needed in order to get their services out to the consumer. That's not so much the case anymore. Employers are finding it easier to fulfill positions, even for skilled labor, and they're not seeing people quit nearly as often because the attractive compensation has come down from other competitors in their respective industries. So as we're seeing continuing claims march higher, that suggests that employers aren't hiring as much. But are they firing? That's the next question. And so far, we're not seeing that as the case. On the right-hand side, we see the initial claims for unemployment, and we have not seen those spikes. If you do see initial claims start to spike and continuing claims continue their advancement higher, that's where we would suggest that employers are really pulling back on not only hiring, but beginning, I should say, layoffs within their individual companies. And so far, we're not seeing that, which suggests, in my opinion, for 2024, employers are going to be at least on somewhat stable footing to begin the year. And from a consumer standpoint, there's not as big of a threat for job termination, which follows through to consumer sentiment and therefore spending throughout the economy. So we do think that there's quite a bit on the table for 2024. These are just a couple of the things that we're looking at as we go into the new year. We hope everyone has a safe and warm holiday season, and we'll talk to you again in 2024. Thank you.